What is going on, everybody? It is your girl Marquita. I'm with Team TRM coming at you with another video. And today we're going to be talking about the anatomy of a trade. So in this video, I am going to give you a quick explanation of trading. We're going to talk a little bit about drawdown, losses, and profits. Now, in my last video, I covered why drawdown could affect the ability to cash out trading balances in my primary opportunity. Today, I wanted to go a bit further into what a trade is, exactly how drawdown works, and what outcomes a typical trader is looking for. So let's start off with exactly what a trade is. Put simply, a trade is a bet that a certain currency is going to do better or worse than another currency in a specific period of time. You make this bet by placing a buy or sell of said currency against the value of another. In these bets, there are always more than one currency involved. We call these currency pairs. Some examples of the more common currency pairs are USD versus JPY, Euro versus USD, GBP versus USD, and Euro versus GBP. There are even cryptocurrency pairs that can be traded, with popular examples including Bitcoin versus USDT, Ethereum versus USDT, Ethereum versus Bitcoin, and Litecoin versus USDT. Now, while these pairs are among the more popular, they are certainly not the only ones. The forex market has about 170 currencies that are traded. The forex trading market is also the largest in the world, with a daily trading volume of $7.5 trillion. Now, when you buy a specific currency, you are placing a bet with the belief that the currency will rise against its competing currency. This can also be called a long. You also always use the first currency in the pair as your guide. For example, placing a buy in this pair, USD versus JPY, would mean that you feel the USD will rise in price or value against the JPY. So here is an image of exactly what going long is. So you see you have a buy over here on this side, and if the price goes up, you make a profit. If the price goes down, you actually have a loss. Now, on the opposite side, when you sell a specific currency, you are placing a bet with the belief that the currency will fall against its competing currency. This is also called a short. For example, placing a sell in this pair, USD versus JPY, would mean that you feel the USD will fall in price or value against the JPY. So here is an image of going short. So you have a sell on this side. If the price does actually rise, so if USD rises in price, then you would have a loss. If the price actually does go down, you would actually have a profit because you put in this sell order. Now, if you place a trade and the outcome goes in your favor, again, you win a profit. If you place a trade and the outcome does not go in your favor, you lose, resulting in a loss of funds. Now, in some cases, a trade is not as straightforward as collecting a profit or loss immediately, and it may sit in a state of unrealized loss, better known as drawdown, that we covered in that last video. So what exactly is drawdown when it comes to trading? Put simply, drawdown is the period during a trade where the outcome is going against the trader's bet. This means that the trader is in a losing position for that current trade. The trader can hold these unrealized loss positions in an attempt to wait for the market to reverse or go in their favor. If or when the market does go back in their favor, the high point of their account versus the low point of their account is used to calculate the percentage of drawdown. This is also known as the peak versus trough. So here is an image of that as well. So as you can see, the trade actually went up to a high point here. It suffered some drawdown through the trough period, and it was able to recover and gain the peak again. So this period of time here versus the peak is actually how you calculate the drawdown. Now, traders have to be very careful when it comes to their drawdown, since the higher the drawdown or loss is, the more profit they will have to gain to recover. And I found this great little chart that actually explains exactly what would need to be gained according to the percentage loss of capital and drawdown in order to get the account back up to its peak and even possibly a profit. So as we can see, we see a loss of capital here, 10%. Okay, in order to recoup the loss, you would have to make 11.11%. 20% has to be 25. But as you see, as the drawdown actually increases, the higher the gain needs to be in order to recoup. So at a 50% drawdown, you need to gain double that in order to make up for the loss. So you have to get 100%. At 90% drawdown, you would have to make 900%. And of course, once you hit that 100%, this says broke here. So you're actually capped out. You cannot return from a 100% loss, okay? So while it's not impossible for a recovery with very high drawdown, most traders try to stick to not exceeding 20% drawdown in their accounts. Drawdown that exceeds this amount is not only perceived as difficult to recover from, but it also lends to the fact that the trader or traders may not have proper risk management. So when looking at PAM accounts, the total fund trading, profitability, loss of funds traded, they all play a role in what's traded and gained in the fund. Similarly, if the PAM fund is in drawdown, the entire fund and its investors are all affected by the drawdown according to the percentage of funds they own in the fund. This is because all funds in a PAM account are pooled together. Each investor takes the profit or loss according to what they have in the fund. So let's look at a real example of this. So this is a smaller PAM that I'm involved with. I took this screenshot on February the 8th of 2023. And as you can see, we have the actual number of the trade here. We have what's being traded. We have the type. So we talked about buy or sell. So as you can see, they're trading AUD versus USD here. And we have a bunch of different trades that were going in. We see the open price and the close price, right? So here is what the total fund is losing. Again, this is a very small PAM that I'm testing out. So you can see these are losses. So right now, open positions, these are trades that were in drawdown. So we see a loss of $214.50 in the fund, a loss of $183, a loss of $101.06, a loss of $253.50, $126.48, $286.50, $253.80. Now, this total amount here is what the fund would actually lose if these trades that are in drawdown right now were to be closed by the traders. So in this small PAM account, you can see the trader is in drawdown a total of $1,418.84. Like I said, which would mean that if all of those trades were closed, the fund would lose this amount of money. However, with the right strategy, risk management, and time, a profit can still be attained with these trades that are in drawdown. So if we look at those numbers, here are the number of the trades here. So I took all of the losses and they actually closed this on the next day. So as you can see, even though the trades were at a loss, we now have profits for most of these trades with the exception of the last one that lost $26.49, and the trader actually decided to close the trade. So after all of this was done, the trader was able to turn the loss around or await a reversal and gain the fund $829.80 in profit. That's after being over $1,400 in the negative with the account. Now, every trader has the intention of earning a profit. There are many factors that go into how a trade is handled. Not all trades will be wins, but the goal is to have more winners than your losing trades. While this was just a macro level of how a trade works, as there are other variables that also play a role, hopefully you found some value in this short video. If so, please be sure to like the video. It helps me understand what content is helpful so I can record more of that type of content. Also, be sure to leave a comment below and subscribe to the channel for more videos just like this one. And if you've enjoyed this video, you may also like this next video as well. But it's been Marquita. Again, I'm with Team TRM. And as I always say, I'll see you at the top or not. You decide. I'll catch you in the next video. Take care.